Good day, all. Ira Epstein of Linn Associates with your agriculture wrap-up for this Thursday, the 16th of January, 2020, about 4:07 p.m. Central Time. Well, another day in the markets, another all-time high day in the stocks. You do realize, I think the stock indices, this is January 16th, have had 5 record highs this month already. Unbelievable as to the power of it. Part of what I think that is, even though we're talking ag, I'm going to come right into that in a minute here, is that the impeachment proceedings have begun. And I think the market did this. Finally, they're here. That's what I'm guessing it is. Certainly we signed the USMCA deal, or it passed in the Senate. The president will sign it. Now Mr. Trudeau has to make sure that it passes in Canada, but that's a deal too. So these are big deals the president has gotten through. Yet the market is punishing the ag market. Corn down 12 cents. That's a huge move in corn. You don't get a lot of 12-cent days in corn. Wheat down 8 cents. The bean market down 4 3/4. Didn't we just hear that there's going to be a huge agriculture deal yesterday with the, 2 days ago, if you will, I think the 14th was the signing of the U.S.-Chinese trade deal. And all of a sudden, cotton's down these markets. Let me tell you why. If you had a chance yesterday to read the deal, the U.S.-Chinese trade deal, what really has happened now is that the market has looked at it. Yesterday was the signing. It's all happening so fast. There's no specifics. And without specifics, the trade's wondering, how's China going to get to these numbers? I am not telling you they can or can't. I'm telling you the thinking that's going on. At the same time, a nice little bounce in the energy market. We'll see where that all carries. When we come to the soybean market, I'm going to, again, come back to this area. If we come up, last week, you finished at 935. If I come all the way back to this high here, that was 936. So on a closing basis, you've got a double top in the market at the 935 level. I talked to our firm today, the research department. I said, you know, what if the beans fall here? What's the farmer going to do? Because the one product that seems to be on the farm that the farmer held on to was the soybean. I said, do you think they'll sell any? And they go, no. No, that farmer's going to hold that has to hold. He has the wherewithal to do it. He's probably got rid of his corn. But that's going to mean we have to look to see where support comes in. Well, if the market wants to break from here another dime, the 914 level is one of those areas. Now, here's what I did for you. Yesterday, before we broke down, this is how the chart looked. And I was telling you that I thought you might have a head, a shoulder, and another shoulder. Okay, that's a possibility. I hate chart formations to trade off of them. I like trading with the different values that I've been giving you with the swing lines and all. You're not getting everything here. Remember that. My morning subscriber video for futures has it all. This does not. You can get a free trial to that if you haven't had it. Now I've got the Spider, by the way, ETF, the Spider ETF video. It's already posted. I post it right after the markets close for the people that like stocks. And with the free trial, you get to try both of them so you can see if you like them. But this is what you looked like. This was Tuesday. Now the market breaks down as of yesterday, by the end of the day. Here's your follow-through. So the Johnny-come-latelys, those buying the market looking for the signing, and this is how I like to view these things. I was there. I once did that. They're already late to the party. This was where the market was anticipating the signing. This is post. And as you can see, the market's taken its chunk back in value. When we take a look at the swing line study with yesterday, forget today, this is how the market looked on Tuesday. You already had a pattern of lower highs, lower lows going into the signing. So the market was already out of the uptrend. It would have had to have gotten back over the 949 level plus in order to negate that trend. Instead, it breaks down yesterday and it gives more value to that break today. Okay. The 100-day average was right here yesterday. You hadn't hit it. I'll get to the Bollinger Bands in a minute. That is your first support zone. Market comes down, goes through it today. Now you put on Bollinger Bands. Yesterday, the market was in between the Bollinger Band and the 100-day. I often tell you here, that's where I think the pros are starting to take money off the table. That's generally an important area. Yes, you slid through it today. It doesn't mean anything to me. You now have 2 days under the lower Bollinger Band. I've already known the trend is down. The market is falling. I don't know how low is, but I would think the pros are really having tight stops in this market because you only stay under that Bollinger Band 5% of the time, and often a first challenge of a 100-day average, you can slip slide around it, but it's generally an important number. What else has happened? We're oversold. So we have a market in the post signing and the post now, as far as the U.S. is concerned, USMCA deal, and the market has given up value. When we come to the meal market, you are oversold, but what's the target? If you get to the lower Bollinger Band, that's the target on the market. Doesn't mean it has to get there, but you're also not trending. You've gone from a lower low to a higher high. This you got through the 100-day average. You did it here and here. That's what I call that slip slide. Doesn't mean it has to hold it, but that's an area I always pay attention to. Market comes down today, gets to 299. That's the exact low today. The lower Bollinger Band is right there, and the market closes over it. I think the pros were stepping out. In the oil market, this is a market that if there were a couple of products that pros thought was going to get bought, it was soy oil, cotton market, hog markets. You'll see what these markets have done since then. But again, this was the anticipation of a U.S.-Chinese trade deal. This is the post reaction to it. You went to the Bollinger Band, you're challenging it again today, and you're still challenging it. You were yesterday and the day before. So now, did you close under it yesterday? Yesterday's close was 33.30, under the lower band. Today you're under it again. That's 2 days in a row. 5 is stretching it a lot. And you're oversold. Nowhere even considering embedding. So I'm looking at this market as pros might be taking some money off the table. In the corn, you've broken out to the downside out of sideways action. This is that sideways action. I think you'd agree with me. If you look at the Bollinger Bands, what you're doing. You tried to come out down here, right here. You closed that day at 385 3/4, couldn't stay under it, came back up, punished the people that went short in there, went towards your Bollinger Band high, another resistance, went neutral yesterday at the end of the day. And I think traders wanted to see, is corn going to be one of the products that's in there? I read the trade agreement. I'm not finding a mention of they're going to buy this, they're going to buy that. And that's what I wrote to my subscribers. Don't look for that. If you are, you're going to be disappointed. China's not going to tell you when they're going to buy, what they're going to buy. You'll see it in the export business. Or if you're a grain merchant, you'll see it right away. You're breaking out to the downside. You've now got pretty stiff resistance above you in the marketplace. So the punishment is happening. In the wheat market is still the one in the uptrend. Now, wheat's like a pork belly market. If for those of you that used to trade the wild market, as I call it, pork bellies, they don't even trade them anymore, but it's bacon. And to make a long story short, you got up to the upper Bollinger Band. What do we talk about here? This is not a trade recommendation show. I want to make that clear. That's my morning subscriber. This is a generalization show. And you're in an uptrend, and I will tell you over and over that I think the first challenge of Bollinger Bands, especially after hitting an 18-day average, will end up being a resistance area, especially if you're not in sideways action. The market caught the people with the emotion yesterday, punishing them today. Now, if you take out 558.5, the first support then is the 18-day average, and you'll be out of the uptrend. That doesn't mean you're in a downtrend. That would take you out of the uptrend. Momentum got overbought. Any reading over 70 is overbought. You have to have both numbers going sideways over 80, and I explained that in my charting course for several days. It's what we call embedded. You don't have that. You're in a corrective mode. In the sugar market, with yesterday, I'll bet that I said, and I'm just guessing here, that you have 4 days in a row over the upper Bollinger Band. That gives the market the way that I use my rule of thumb. That's all it is. A 98% probability today the market will close under that band. In other words, I want to walk around the street making those type of bets. I'm going to lose a certain amount of them. but if you count on your charts, you'll see that you're going to win more of them. And I also said, and I'm sure of it, that doesn't mean the market's bearish. This market's still very bullish. It's just getting itself in line on pullbacks until you lose both numbers that are over 80, until the red line closes back under it. I expect the pros are going to buy the break. Lose that, I think that they'll say, okay, I missed that move. I came in late, blah, blah, but I'm still bullish. What did I say in coffee? I'm pretty certain that I would have said that this is all bearish action. First bounce probably met with selling. You have the embedded reading, which I think is the strongest signal on a chart. And I'm looking for the possibility, I don't know if it'll happen, of support to show up again between the 100-day average and the lower Bollinger Band. Well, it hasn't hit it yet, but I'm all of 100 points, 130 points away. So I'm in the ballpark. That's all that I care about. Lose that red line and you can get one voracious type of rally just off short covering. You've come from 140s into the 112 area. I mean, it's a heck of a break. In the cocoa market, how many days do we have over the upper Bollinger Band? Well, today for certain, that's 1. Yesterday's 2. The day before is 3. And this day it wasn't. So I give tomorrow a 96% chance of the market trying to break under it. It's not the same as 4 days or 5 days in a row, and it's not a sign of weakness if it does that. You still have an uptrend that hasn't offered a price break, and what about getting embedded? Well, both numbers today were over 80. Yesterday, both were over 80, not the day before. Markets typically don't embed, so the odds even increase that tomorrow could be a weaker day than it being a strong day. If it does embed, I'm going to say that I then expect the pros to start buying breaks until that reading is lost. In the cotton, you tell me the number I'd be looking for on a correction here. Here you are, first challenge of the upper Bollinger Band. Market comes in yesterday, the 14th, that's 2 days ago, the 14th. Yesterday, the market doesn't respond well at the end of the day signing of the U.S.-Chinese trade deal. So if it breaks, because you lost the embedded reading, and let's take a look again because we keep talking about that, one of the things I'm looking for, can it make it to the 18-day average of closes? Not all the time do you, but more times than not, if you go look at that, you're going to see what I see, or the next closest major moving average. In this case, it happens to be the 18. You tell me the number it got to today and where the pros stepped out. You hit 69.73. 69.74 is the 18-day average of closes. The trend is not ended, but what you have is a market that's very overbought. And again, you have a market that from the beginning of December ran up, I think, that's just my thought, in anticipation of the U.S.-Chinese trade deal. When we got it, the post-reaction was a correction. When we come to the cattle market, is this going to be a breakout to the downside? Well, let's take a look together. One of the things I tell you in this sideways action, whipsaws, which way is it going to settle out of that? Number 2, what do we talk about if you hit a Bollinger Band? If you hit a Bollinger Band, even in this type of action, it's often the area pros will step out of a position. Market came down, hit the lower Bollinger Band, turned away, closed 50 over it. You're not going to embed. You're just in a market that is no longer, by the way, overbought. You've got a market that is still stuck in sideways action. In the feeder cattle, what number did you reach down for? You already had yesterday the pattern of lower highs, lower lows. Admittedly, you closed over the 18-day average, so the bias stayed up. If the market hit the upper bands and couldn't go, what if it gets to the lower band? Made its run for it and came back over that. We'll see if it can do anything if it gets there. Like the fat cattle, you're working off an overbought condition. You're no longer overbought. In the hog market, wasn't this supposed to be pork? Chinese are going to buy a massive amount of pork? Doesn't look to me like that. It looks to me as a chartist that you got nothing here. You got a higher high, lower low, a downside bias in a market that is staying oversold. Wouldn't know what to do with it. As I said, my research, let's talk about what I do with this. For futures traders, I'm putting out, as many of you know, these end of the day videos, but then you haven't seen my morning subscriber video, I record it between 5:30 and 6 typically every morning. You get it in your hands well before 7 a.m. And I give you my thoughts as to what the day is going to hold. And unlike this, I'm saying buy here, sell there. I want you to do this. I want you to do that. I back it up with a short written commentary. Give you an idea like I'll write tonight what tomorrow's reports are, events to be looking for, what I think the market's doing. I've been doing an audio commentary. Eventually I may not because I'm doing so much of the video and I like it so much. But we're still doing that. And I'm now offering with it. If you want to see the Spider ETF video, just sign up for any free trial on our website, and you will get that while I'm offering the free trials on this. How do you do it? Go to www.iraepstein.com. You'll see on the bottom right free trials. Go in there, click on the free trials. You'll be in business like that. You'll be getting from us user ID and password so you can get into my Spider ETF videos, which I try to get them out before 4 p.m. Central Time. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.